I'm Kamiar Mohaddes. I'm an economics fellow here at Girton. And with me, we have two Girtonians, Colm, who's a Girtonian and founder of Comac Capital. It's a global macro hedge fund. And previously, he has also managed macro trading for Soros's Quantum Fund and was MD at Citigroup. So he will know loads about finance. And Mia, who's a fellow here at Girton, an economic geographer at the university, and also a senior analyst and research fellow at the Cambridge Center for Alternative Finance. So if you have any questions about finance, although I'm an economist, please ask these guys. So excellent. So I think we just get started. So the shape, the sort of structure is we're going to have some back and forth, and then we're going to open it up to the floor. And if there's anything you really want to ask, if you just wait maybe 10, 15 minutes and then jump in. So, okay, so we have some questions for you, Mia, first. So the financial industry has been changing a lot, especially since the great financial crisis, the Great Recession. And we have these things called FinTech, alternative finance. What do these terms really mean, and are they really different from traditional finance?
Good question. Well, they're very nebulous terms, I would say, and a lot of people have used them to try to capture whatever they're doing. But there are kind of ways we can think of kind of some of the distinctions about what's going on. A lot of it has been kind of these online platforms that function as an intermediary between people who are borrowing and people who are lending, or people who want to invest, trying to do it in a way that kind of skips the role of the traditional finance industry, particularly the banks. A lot of it in the UK, I mean, there's lots of different reasons why this took off in different places. In the UK, a lot of it really came out of the post-2008 financial crash. And one of the early surveys we did at the center really picked up on the anger at the banks, and that people were actively seeking out a way to invest or to lend and borrow by bypassing them. And they saw this as a mechanism. This changes, and different things were happening in different countries that made, like for example China, that made it kind of catch on very quickly. It's alternative finance is about 400 US dollars, about 400 billion total worldwide. It's dominated by China. It's about 87% of the market is in China, about 10% in the US. We're third in the UK, with about 2% of the global market. So, you know, in a way, we're a small player, although in some ways we've been quite important in shaping the structure of the industry.
Excellent. Colm?
Yeah, so my background, I've worked in traditional finance. I worked for about a decade or so for a big bank, which is very traditional. I then worked in hedge funds, which is known as alternatives, part of the alternative space. So it was alternative asset management. And then over my career, hedge funds have become more tightly regulated, and they've probably looked increasingly like traditional finance. And in their wake, what's come up are new firms and new ways of doing things, which we call alternative finance. Alternative is just kind of often like a new way of doing things we haven't found a definition for, so it's a bit nebulous. It can kind of mean what you want it to mean. And more recently, I've got involved in FinTech. And FinTech, nice little jargon term, all it is a combination of the words finance and technology. So it's just, and having been involved in it, it's much lower tech than you'd think. This isn't scary technology, because frankly, finance problems aren't really tech problems. What's really interesting about FinTech is, to me, it's the people in it. So what you have is people with tech backgrounds trying to solve finance problems, which is all new. And that is quite a refreshing perspective, having been a banker. So a good example of a FinTech firm is, you might know, is PayPal. PayPal, if you go online, you're making payments, you're on Amazon or Apple Pay or something, you think, oh, PayPal, I've got my PayPal. That's a classic old FinTech. And it's now possibly becoming a bank, because all these things that were alternative then become part of this world. And a big part of the changes in terms of delivery, what do we know? We all have these lovely phones. that really changes how financial services are delivered to you. So you'll think of it in a different way. And actually how you think of it differently is the thing that's really alternative, I think, about the modern world, is that young people trust their phones, they trust tech firms. I'm a bit older, I find that bizarre. I don't trust Facebook at all. I'd much rather go to Barclays. But different generations, they feel very differently, and that's really transforming the whole scope of financial services.
Yeah. Just to add one other thing. Also, I mean, I think we could think of it as a spectrum of how formalized it is and what's happened as well. You know, with the FinTech firms kind of applying technological solutions to a lot of the problems that finance firms have, to a lot of the peer-to-peer kind of trading that's happened where consumer loans and business loans are done through a peer-to-peer platform, all the way to maybe crowdfunding, where we might think of both people investing through some crowdfunding site and kind of actually buying equity, but also kind of some sort of reward-based or crowdfunding just to support a project we like. So we could think of it maybe as this giant spectrum from formal to informal.
So you talked a little bit about what sort of things have driven the growth in these areas. Are there any other? And I think from my point of view, will these things actually, will this sort of finance serve people better? Colin?
Yeah, happily. So a big driver in the UK of why things innovation is actually a very supportive regulator. Bank of England in particular, very supportive. So there's something you probably haven't heard of called open banking. That means it's much easier to move your bank account from one to another, which aids competition. And the other thing that's happening is Bank of England is very supportive of new banks entering. So it's not just the cartel of the big high street banks. You've got these new challenger banks. And these new challenger banks mean that there's more competition, and often you'll have a product that's more targeted for what you specifically want. So a big one at the moment is Monzo. Now, Monzo is something that I frankly didn't know a lot about, but I asked people in my office who were younger than me, and my God, they were enthused about their bank account. It was extraordinary. They love Monzo. They go and say, oh, it's great, I can do this, and it gives me an alert when I'm spending too much, and it hides the money from me, and I can do this. I'm like, I don't know why any of that is a good thing. It sounds terrible to me, but they love it. Genuine enthusiasm, and so everything is banking on an app, super quick, super easy. Now, does it benefit society? Well, I think all change is double-edged. So who does it benefit? Generally, the young people love it, frankly. Every young person who has the account loves it. People who love it less, generally, is the older generation. Older generation generally doesn't want to do all their banking on an app. They want to go into a branch. They want to speak to a human face-to-face. They want to have this kind of interpersonal communication. That's completely lacking from this. And one of the things that leads to, it's really dangerous, is one of the biggest rapidly rising areas of crime is fraud against older people. Because you've got people calling up, they're targeting older people, phone calls, emails, claiming to be bankers, and they're criminals. And this is leaving people vulnerable. It's a real problem. So the future has to be on our phone, it has to be apps, it has to be new technology. But as a society, we still have a duty to manage the transition.
Yeah, I think it's also interesting to think that, you know, more people have phones than have bank accounts. So the whole issue about people who are unbanked, that in terms of kind of including them into the formal financial system, it's very much kind of been strategy also in terms of fueling the industry of the World Bank and other big financial institutions to actually use mobile technology in order to kind of, as a mark of inclusion. I personally don't necessarily think it is inclusive, but that is certainly the kind of narrative that they've been using to kind of roll this out, is particularly in developing countries. So I think globally, like different things have been kind of driving the industry around the world. You know, if you look at China, which is such a big player in alternative finance, you know, they had a very weak legacy banking system, kind of state-owned banks that, you know, wasn't difficult in a way to kind of roll out these alternative platforms. People kind of were very enthusiastic about it. partially, as you say, in China, as in the UK, young people were very enthusiastic and were happy to kind of embrace a different model of how we access our finance and how we do these things. But also the fact that the banking system was so weak. Also places like a lot of developing countries, let's say Kenya, where, let's say, M-Peso came out. So here you have kind of banking and payment systems through mobile phones. It controls this one platform, about 75%. About 75% of the entire GDP of Kenya goes through M-Peso. It's extraordinary, you know. It's a big player in India and South Africa and many places where the mobile phone has become the bank, you know, vis-a-vis these platforms and different firms behind it. So kind of, I think growth has been fueled by different things in different countries, kind of depending on kind of that institutional legacy that was there from the financial system. And as you point out, how supportive the regulatory system has been. In the UK, the FCA has been very supportive and has kind of made some bespoke kind of regulatory changes to kind of enable this to happen, which means the UK, certainly within Europe, is the strongest, biggest alternative finance market there is, and largely, I think, because of the regulatory structure around it.
It's interesting though, because if you look at, so we talked a little bit of regulation, I want to come back to it later, but just thinking about it, in China it's very much a light touch regulation, and that's where really FinTech has sort of taken off. In India it's a lot about mobile payments and access, which you've just talked about. And in sub-Saharan Africa, that's really, really taken off. I think about 10% of GDP is through these mobile platforms. It's interesting that Europe has a lot of potential, but it's still quite small. So on that note, do we see a different patterns of lending or investment in alternative finance as compared to, say, banks or the venture capital industry? And if that's the case, in what ways is that beneficial?
I think we have in parts of the industry. Again, I think it's hard to talk about it kind of as one whole, but if we think of that spectrum, I think the peer-to-peer lending has, and the equity crowdfunding has shown some different patterns than we see either from the banks and traditional banking industry or from venture capital and what venture capital has done. I think we see women have received, so female entrepreneurs have received more funding through that mechanism. We see northern firms, in terms of thinking about a north-south divide and the ways in which finance has been very London-centric through the traditional financial instruments. We see that northern-based small firms have gotten more funding, and particularly manufacturing firms. The two are connected, right? So more northern manufacturing firms have received funding. More of the firms have received funding that are kind of hard for the traditional banks to kind of characterize. So a lot of the knowledge-based industry firms that are kind of hard to get a kind of standard borrowing profile on, they've done well through these alternative channels.
As a practitioner.
Well, so what you have, I think this is the natural how capitalism works. Gaps get filled. It's a service industry. Those gaps get filled. So people who need funding, who want funding that traditional banking doesn't serve, they might get funding through alternative finance. And that all sounds great. There's a problem to it, though, which is that whenever people do it, just bear in mind that often people think it's evil and exploitative. So you may think, oh, it's great, all these people who can't get funding from banks, they should get funding. And I'll give you an example of a company that did that. Wonga. Everyone hates Wonga. They think it's disgusting and evil. So lending outside of traditional banking isn't like, oh, that's a wonderful thing. Or let's go back further in history. Let's take a great Dickensian protagonist who was beloved in the local community for his financing of low-income families in his area, Ebenezer Scrooge. This is not actually, so people think of it as being a good thing. They also think it's totally evil at the same time, and they probably haven't reconciled this. It's one of the issues we have about how to regulate finance. Do we encourage more of it, or do we close it all down? And that's what I have some sympathy with regulators. They can never get it right because I think it's impossible. But the thing that is, I'd agree with you, is that really the thing that matters is, in terms of what's happening, is in developing economies. So you mentioned China. So it's about 75% of people in Southeast Asia do not have a current account. And what we're seeing there, in a sense, they've skipped what we're doing. So China, they completely skipped debit cards and credit cards. Just don't bother with those. Everything's direct payments on your phone. And how's it done? It's done through a division of Alipay, which is their version of Amazon, and through WeChat Pay, which is a division of their equivalent of WhatsApp. And so this is this fusion of tech and social media. Finance and social media, and in a sense, that's where we're going to be next. So they were behind us, and now in many ways they're ahead of us, and you should look to them to see what things will look like here very soon.
So Colin, basically what you're saying is that Bitcoin is going to replace the pound. Is that right?
Bitcoin. So Bitcoin's super exciting. I'm sure you're all Bitcoin enthusiasts who've been really delighted by its recent doubling in price to $13,000 last week. So actually, I generally speak to more FinTech people who are more excited about Bitcoin. This looks like the wrong audience for this. So I have to admit, generally in that audience, I'm definitely on the skeptical end. I'm not really a cryptocurrency guy. So I'll say about a couple of things that everyone knows about cryptocurrencies.
What about Facebook's Libra otherwise?
I'll get there.
Okay,
I'll get
good. Yeah.
So, because what cryptocurrencies are, so Libra's meant to be an example of cryptocurrency. What's a cryptocurrency? A cryptocurrency, what do we know? They're highly volatile. They go up and they go down. That's what makes the front pages. So why is that good? Well, if you're trying to make a transaction, that's obviously terrible. You don't want to go to Starbucks and click on your phone and go, wow, that latte cost me £100. Oh, I didn't realise. Oh, that's obviously terrible. So what's that good for? If you're a speculator and you want to gamble on cryptos. Okay. What's the second thing about crypto? It's secret. So you can make a payment and no one will know. No tax authority, no law enforcement agency. Who's that good for? Criminals. So what's the point of cryptocurrencies? It's good for criminals and speculators. So has Facebook solved this problem with Libra?
I was going to say, where is this
Don't worry, Facebook have solved everything. And in a way, they have. So what they've done is they've essentially solved the speculation problem because they're essentially, it's like a central bank, really, for their cryptocurrency that will stabilize its value versus real currency. And the second thing is, what about criminals? Well, don't worry, it's not private anymore because Facebook will have everything. And which means that tax authorities and everyone can see it. So Libra's going to be fantastic. Well, depends if you think it's fantastic or not, but what it is, it's not really a cryptocurrency. To me, that's just the kind of PR spin on it. It's not a cryptocurrency at all. It's much better understood as being like PayPal. It's something that sits on top of our existing financial system, not beside it as an alternative. And so it's much better seen as a competitor for MasterCard, which generally gets less headlines. So you see why they've launched it, because they've got this whole libertarian modern feel to it, but actually, it's actually quite traditional finance, not modern tech.
Interesting.
I agree completely. I am also a skeptic of that. You know, it is the issue of volatility that really stops cryptocurrency of any sort, Bitcoin or anything else. It could be a medium of exchange, it could be a unit of account, but with volatility, and it is about speculation. The whole issue about Libras, I think the central bank analogy is great. Do we want a private firm to be our central bank? You know, in a way, kind of that's. So if we think of central banks as having, through stability and different macro programs, kind of have public good at least balanced amongst everything else, if not kind of foregrounded, then you need to really kind of think, do we really want this kind of done by a private firm? So I think it's very problematic, but I think, you're right, that ultimately it's more about another PayPal or credit card, or, its ability to be a medium of exchange is nothing new.
So basically, it sounds to me like, because in Sweden, we have a nice program which is like that, because basically the central bank is creating this e-kroner, so it's going to sit on top of the system as opposed to on side of the system, so it's trying to crowd out these investors. That's interesting. Now, the reason I am here, I don't know about you, is that I want to know how I should invest my money. So is alternative finance something for me, or is it mainly for institutional investors? Mia, what do you think?
I think Colm should go first on that one. You've got a track record. Where should you invest your money? For retail investors, many small-scale retail investors kind of have gotten very involved in the UK context. This really differs country to country. So in the US, it's mostly dominated by big institutional investors, partially because of the regulatory structure being very fractured because of the state system. But so there's regulatory kind of boundaries there that we don't have here. I mean, there are a couple rules you have to have here. You have to invest more than 1,000, and there are 3 rules or something. But small-scale investors have been dominate financial alternative finance here. About 60% of the industry. Whether it's a good way to invest your money is something else that I might kind of defer to Colm. I mean, it depends. I'm risk adverse. I tend to keep my money in very safe places. But that is why I don't have some big pot. That's why I'm an academic here at Cambridge and not kind of anywhere else. So I'm going to pass that over to you, Colm.
Yeah, I'm not here to give personal investment advice. That's a different kind of regulation, which I'm not qualified for. So actually, what I really think quite strongly about saving is that people focus on the wrong things. So they're focusing on exact details of their investment portfolio. And the big thing for most people is simply they should save more. Doesn't matter what you save in, you should save more, but people don't do this. Why don't people save more? Generally because we absolutely don't care much about our future selves. So you may experience this evening, by the way, as the sun is shining, it is rosé season, and your Sunday morning future self may not thank you for your Saturday evening self that had a couple too many rosés. We're very good at ignoring the future for present pleasure. So I've tried actually in my career to think of ways in which to give better solutions, because investment management industry at the moment, the solutions are frankly terrible. They're complex, they're expensive, they're just not fit for purpose at all for what people need to invest in. And I've come to some rather tough conclusions, which is that we kind of get the financial services advice that we want, and there's a couple of problems with it. One is that people really get confused about how to judge quality of advice, and people think of price as a way to judge quality. Retirement funds is one of the most important decisions you make. So you think, yes, I'll want to pay a lot to make sure I get really good advice. And actually, you're just paying a lot. It's not particularly good advice, and it's terrible. And the second thing is finance. People think of finance as scary. It's confusing. It's complicated. Therefore, the answer must be really complicated. Yes? And so when they go see a financial advisor and they give them this really complicated answer, this complexity is quite reassuring. Go, I thought it was complicated. Yeah, I'm glad you're here. Phew, that's really a relief. And it's nonsense. It's absolutely not true. I think finance isn't actually that complicated. It's taught to be very complicated. It's believed to be. And so I'll come to the conclusion that maybe education is a major problem. So we're not taught anything about finance at school. I spent 3 years here. I guarantee, even doing economics, I learned nothing about finance. And so maybe if we had an education system that actually taught people a little bit, then there might be a space for a company to offer a simple and cost-effective solution people would be able to understand and buy.
I wonder if the two are related. If people feel slightly ashamed in a way that they don't save very much, and actually being open with someone about kind of that also means they just kind of defer and don't think about kind of, so going to a financial advisor and saying, well, actually, I saved nothing, or I have this little pot and that's all I have. I wonder if that actually is part of it as well.
Yeah, it's just like a dirty little secret. It's like a confessional.
Yeah.
And it's not something that it should be actually very straightforward. You should follow simple rules. I have this, I do this, I do this. And I've actually tried to have businesses that provide solutions like this that completely failed. Because no one will buy it. No one will buy simple, cheap products because they're like, must be rubbish.
Yes.
And it's just. So actually, my hedge fund, which wasn't simple or cheap, was very successful. The world's a weird place.
Interesting. So I've just cancelled a bunch of trades.
Keep it simple.
Keep it simple. What about, so we talked a lot about technology and its influence. What about AI? Is that going to lead to a revolution in banking and finance, Colin?
Artificial intelligence. Oh, yeah. So I get involved in FinTech. So if you're ever in a FinTech pitch, everyone's super excited about how their business is an AI business, and it's absolutely not true. So it's just a thing people say. They drop it in all the time, and you try and work out where their AI is, and it doesn't exist. So AI is something that people generally don't really understand, particularly even people who think they're in the industry. AI is often misunderstood. It's really a way to better sort data. It's not really like the sci-fi movies. Doesn't mean it's not amazing. It is amazing, but it's really sorting data, and it does particularly well in things with fixed rules with repetition. So chess. I love chess. I play a lot of chess. So AlphaZero is phenomenal at playing tens of billions of games of chess against itself and becoming amazingly good at it. Financial regulation, finance world, regulation changes one day, all the rules have changed. Now, if you ask AlphaZero, now play some chess, but knights don't move in that way, they move a different way, AlphaZero, funnily enough, won't be any good at playing chess. So AI doesn't do well at solving new problems. So in terms of financial products, no, I think AI is massively overhyped. Where it's going to be really important is in delivery of financial services. Now, you'll see it already. You'll see it on your phone, on your email, of spookily and scarily accurate ads that you open up and go, wow, how did they know that I wanted to buy exactly that jacket? Or everything's, and that's AI, and that is amazing. And the second thing, the thing that you probably hate at the moment is when you go to a call center and you're speaking to a robot and it's like really annoying. AI is coming, and soon you'll be, oh, thank God it's not a human. Because the robot will be so much better at solving your problem. And tell you something else, it will then, as soon as you speak, it will guess your age, it will recognize your accent, everything about your pattern of speech, and it will mirror it back. Human salespeople do this all the time. We mirror back to make ourselves likable. AI will do it so much better.
So this is very interesting because Alexa does a lot of good things, especially before I realized that you have to stop it from buying things from Amazon, and the kids were buying chocolate, So that's where we headed. Okay, Mia, what do you think?
I agree completely. I'm sorry to agree. But I think, the way we think about AI as some kind of science fiction-oriented technology only exists in science fiction. I think there's a very little real machine learning that exists. People tend to conflate, both in popular media, but also in academic kind of work. They conflate robots, automation, and machine learning with big data into something that's much bigger than actually exists. I'd say most of these firms already use a lot of these and invest heavily in these kind of technologies, but it's not really radical. I think that there is some difference, again, if we think about the spectrum of the industry, that some of these platforms don't have the resources that the big, more traditional kind of finance industry does. So I think actually this is one place where the traditional financial industry is able to kind of move into FinTech in a way because they have the money to invest in technology more than these small platform-based kind of entities.
Okay, so basically it's not a revolution, but it's sort of incremental change in the industry. Interesting.
Exactly.
Okay, so the thing we like to talk about, risks. So Mia, what are the key areas of risks in alternative finance?
Blimey, there's a lot. Again, it differs country to country. There's enormous variation depending on how it's regulated and what sort of oversight we have. In China, there's been really big issues with fraud. And with one platform kind of scheming to bring down other platforms, and really kind of extraordinary, could make kind of a new kind of spy kind of film about kind of these platforms scheming against each other. But more generally, I think cybersecurity is an issue all around. Some of the cryptocurrencies we've been talking about before have been hacked. Despite kind of distributed ledgers and things like that, they have been hacked. Many times, this is not... So these sort of things are still enormously problematic for the industry. They live by technology, as we were saying with AI, but they also can die by it as well. Fraud, issues with default. Again, depending on the country, this it hasn't been particularly a problem in the UK, but in developing countries we've had more problems with it. In some countries, interestingly enough, the issue of regulatory change has been brought up as a risk. And actually what we often see is countries with low levels of regulation, actually the firms are calling for regulation because they want a market to be created, to be constructed. And if there's not enough regulation, if there's not enough trust in the system and how it functions, it's actually problematic for these platforms. So, you actually have the industry itself calling on regulators to kind of be bolder sometimes in their regulatory structures.
So is that going to solve the security issue?
I think the key issue, I think the word you used, it's a really important word, is trust. And when you think of risk, and so who should you trust? And where I see the big danger in alternative finance is if people don't really realise the risks they're running. And this comes from the regulatory structure. So I actually get a bit confused by some of these alternative finance firms at the moment. So I come from a world where I used to work in, there are mainstream financial products that basically the public can buy. And what are they trusting? They're basically trusting the government. They're trusting the regulators. They wouldn't be allowed to buy something that was basically going to kill them. This is what you do when you have like a kite market. It's all okay, regulated world. Then you have the world that's less well regulated. Let's say hedge funds. I run a hedge fund. We're simply not allowed to take investments from regular people. You have to be an accredited investor. And basically because you are taking the risk as an individual. You as an individual have to decide, am I happy with this risk? Do I like this manager? Am I happy with their portfolio? Do I understand what they're doing? That's not something that everyone should be doing. And where I get confused with alternative finance is it seems to sometimes be slipped through the cracks. And that is ripe for fraud and mis-selling. So a recent one was London Capital and Finance. So over £200 million just went poof of a bunch of people that invested their life savings, which is obviously terrible. And it seemed to me virtually incomprehensible because they were investing in a product that was, compared to a hedge fund, massively high risk. You look at what they're doing going, that's crazy. So no hedge fund investor would ever invest in it, and no one taking individual risk would look at it and go, that's a good idea. But it wasn't regulated. So they're buying products that, if you interview the people afterwards, they sound as though they thought they were in the regulated world, but they weren't really. And if it isn't clear where people are, then they don't know, should they trust, should they not trust? So you talk about platforms not having enough trust. Well, sometimes I think these platforms people have too much trust in them, and they shouldn't have trust in them, and they should pop down to their local bank and just talk to them instead. It may not be give them 8% a year, which apparently is what you get, but it's I mean, there's basically a caveat emptor. Basically, if someone offers you something that's too good to be true, maybe it's not true. But still, £200 million of people's money just goes away because they just thought, oh, aren't I lucky? And that's why people need to be protected from these kind of these scams.
Interesting. So do we think just like Google, Amazon, Facebook, Uber, are we going to have a sort of a dominant global platform for finance, both including traditional services and this alternative finance, Colin?
No, definitely not. I really hope not anyway. But I really really strongly think we won't, for a couple of reasons. So what's the tech model? The tech model is to either live in a world where there are no regulators, like Facebook, because it's a new thing, there's no regulators, and they can expand with no constraints, or they work in a world with very weak regulators. An example is Uber. So the Uber business model is start up in a new country, it's illegal, who cares, start it anyway, and it's so popular that the people will change the law to make Uber legal. And that's how they spread around the world. So they broke the law over and over again, and they changed, and regulators always had to change to come in line. Financial regulators, thankfully, have a little bit more teeth. And so they will close you down if you are breaking their laws. And so I don't think you can just run roughshod over financial regulation. And the second thing is, financial regulation is local, not global. Every country has its own regulator, its own rules. They're all different. So it's not just one thing, Facebook all over the world is doing the same thing. UK regulation is different from US regulation. You can't have the same company doing exactly the same thing. So actually I think the question is the other way around, which is, will tech end up looking like finance? Because tech, you've got all these under-regulated massive monopolies running around everywhere. No, they need to be broken up to smaller things, and they need to be regulated. That seems the natural path of where we're heading. So I think actually finance may be the model for how tech should be regulated.
What do you think, Mia?
I don't agree.
Yes!
I just think there probably will be some dominant kind of global platforms, I think, because it's such a good question. I think, you know, the FinTech is, I think, the biggest threat to a lot of these banks, in the sense that they have the pipelines, the channels in place already, in a sense. And, you know, Facebook and Amazon, Amazon already provides loans to small and medium businesses. Apple has its credit cards. PayPal is probably the original, as you were saying before, probably the original kind of FinTech in a way. But I think these firms, they do have power over their data that they gather. They have the brand, they have the channels in place. Yes, they do have this kind of fractured regulatory jurisdictions that they have to kind of, however they're expanding their business model, would have to get approval for. But just by having a presence, and often you know, a band of lawyers in each place, they are able to, in a way that, you know, many firms wouldn't be able to. So I wouldn't be surprised in the future if we saw one of these firms really becoming kind of the dominant player globally. Alibaba, I mean, you know, it could well kind of come from China.
So I have another 20 questions, but Emma here seems to think, well, we need to leave the room in 20 minutes. So I better open it up to the floor, and maybe we should take three questions at the same time, and then if it's and then we come back and grab some more. Any questions? Oh my goodness. Should we start maybe on this side and then go to that side?
I'm going to a very, very simplistic level. You said that many more people have phones than bank accounts. I can understand how it can work sort of as a level above the banking system. I can't understand how it works if you don't have a bank account or some way of paying the tech that's on the level above. I mean, I'm always asked for a credit card, or I'm asked for something else, and that's banking.
Okay, thank you.
Yeah. I would go. Yeah, it's a really good point. I think you're basically true if you're talking about England. So it's true here, we have a big banking system, and that's how it works. And you have a local currency, the pound, is all that happens in. But actually, you can essentially do it via basically, if you have some cash, you can upload it. So if you have like Revolut or something like that.
I was going to ask you about Revolut.
It's okay. So Revolut. So imagine Revolut is an example where you basically upload. You give them money, and you did it from your bank account. Basically, I agree. I do understand the kind of.
In Africa, you go into the local journalist or corner shop and pay money into.
Yes. So all just there is a way to get cash. You get paid for your work in some way. You're paid in cash, not your bank account. How do you get? So then you go into the shop, then that will get transferred onto your phone. Onto your phone means to a company. Yes, that company is basically like, it's basically you've got Amazon vouchers, let's say. You bought Amazon vouchers on your phone. Then you can buy things and move things around. You can trade services, but you're within that company, not within the banking system.
I also think some of the payment systems have become quite sophisticated. One of the big firms in Mexico, for example, has found all sorts of alternative ways to think about having a credit rating even if you don't have a bank account. So, the very fact that you pay your bill, and this is kind of captured on your phone every month, if you pay your phone bill, that can then start to, create your credit rating, and then they might actually lend you money kind of in addition, and as you were saying, not necessarily kind of that.
And that's going to say where AI comes in, because AI may replace credit ratings. So, or your social media likes may be a much better predictor of whether you'll repay a loan than your credit card history. Yeah. AI will seek out all sorts of bizarre connections.
Or your networks,
So those are ways in which the phone itself then becomes the mechanism through which you can kind of have access to your money, or even borrowing or kind of on credit.
Can I take 3 or 4 questions, and then we just go? So just collecting questions. Right.
Thank you very much for an excellent talk. My question is really about AI and human nature. So things like Monzo are great for doing £100 and spending at the bar and telling you not to spend too much and stuff like that. But when I want to get a mortgage or a pension advice, something that really matters to me, I'm kind of a bit more fearful. I want to get this right. And I don't really want to have a machine saying, well, we've done it really quickly. So do you think that AI can really overcome those human concerns and fears about our long-term future when we make those real financial decisions, not the little ones, the big ones, which is why we like to see a bank manager still?
Karen, do you have it? Or you can go, and I go over to the other side next. Okay.
Thank you. Most of what we've been told about concerns people or organizations that actually have got funds. But how does all this clever stuff actually help to reduce poverty and or increase productivity? Yes. Which was part of the reason why I came to this section.
Excellent questions. The third one there.
My question actually sort of slightly relates to that. We've talked a lot about replacing bank accounts with phones, but nobody's actually mentioned cash really in notes and the impact that might have on poverty when you're talking about smartphones, which are very, very expensive, people who might like to budget by physically having cash in front of them. So it ties in back to that poverty kind of point as well.
Should we take these 3? Mia, do you want to get started?
Sure. I'm going to start with the reducing poverty one, reducing inequality. I'm not convinced it does. These are different mechanisms whereby we have structured people's the way people interact in the economy through these kind of digital online platforms and through these technological kind of advances in the traditional industry. It doesn't change the distribution of income at all. And so it's interesting, like the World Bank in particular has really been pushing this as somehow as poverty alleviation. I don't think it is in the least, because it doesn't change the distribution of income. You could say, I suppose, if you were being an optimist, that actually some of these small-scale entrepreneurs, the very small-scale kind of businesses that have gotten funding may not have been able to through traditional finance. But I would probably say that they, in an earlier era, also 20 years ago, they might have gotten microfinance. That again, kind of, it's important not to confuse the channel of funding
What about
with the actual
redistribution,
funding.
though? So think about, like, if I'm going to give out benefits, but I can't reach you.
Well, that's really interesting because a lot of countries, let's say in Latin America, were very early movers. Part of the conditionality of receiving benefit was that it would be online, that these would all be kind of digital transfers, and that they had to have kind of, if not a bank account, at least a way to kind of access this through phones and things. So it's kind of forced people away from cash. You know, to go kind of bring your question into this, that this, particularly in many kind of poor communities, hasn't been a choice. And as conditionality with welfare benefits has increased, you've gotten, actually that's another driver in these countries of people using these channels because they don't have a choice.
Yeah, and the cost of the equipment actually to use this is quite high.
Yeah, it can be, and not, as we were saying, not everyone has a mobile phone. Although, funny enough,
Mobile phone.
actually,
Yeah.
a mobile phone, yeah.
Yeah.
Although mobile phone
The penetration is
ownership
quite high, though.
penetration
Yeah.
is very high in low-income countries because people, it is a lifeline for people. And you know, if your benefits are, but even in the UK, you know, benefits come through this channel, and many people find it very problematic. It's also problematic, you know, going beyond finance for a minute, dealing with the whole bureaucratic system in order to get your benefit through your phone. You know, it's not always easy. These systems aren't always created to be able to access it on your phone. So it causes all sorts of issues.
Before I go to column, there could also be an issue with reducing corruption, right? Because if you demonetize the economy, you bring in this cash, which is with... so cash is not always a good thing. If you think about India, 83% of the currency came back. You realize that, oh my gosh, there's a lot of people who hold on to a lot of wealth, which they shouldn't, and they're not taxing. So there are other ripple effects. But column.
Yeah, I agree. It's in the title, and it's a really good question. Very fair. The problem is you don't have a libertarian on the panel, unfortunately. I do know people who believe this. I think it's insane. But basically, this libertarian dream that we'll have everyone's this individual entrepreneur, everyone gets access to everything, and suddenly everyone gets rich. It doesn't make any sense to me at all. I think that finance is, I mean, you might say neutral, but not. It's a terrible way to redistribute wealth and income and all those things. You might say it plays into increasing inequality by facilitating the gig economy. All those things are debatable. I'd say I think it's double-edged at best in terms of how, but mostly it doesn't really play a part, and it's more centralised. You look at all sorts of other things in your society to do with around income, mainly to do with tax. I think it's much more important than whether you have an app on your phone or not. But in terms of poverty, there's one area of finance that I think isn't talked about. It's really important. Is why did China do so well? So how did China, the economic miracle, how did it move from being a very poor country to being China? And it's really underestimated, I think, the impact of finance on how this happened. Now, because what they did was they centralized finance, and it's socially subsidized. So what you have at the moment, if you're a startup or a company or anything like that and want to borrow money, you'll borrow at very high rates of interest because you're very high risk. So any private enterprise will do a wonga on you because there's no other way, because you're probably not going to pay it back. So and therefore that doesn't really get you anywhere. What China did, they said 6%. So massively subsidized state lending. So huge expansion of credit in the Chinese economy at massively subsidized pricing, and then that's the Chinese miracle. More than anything, when we talk about China, I think people underestimate that it's the finance miracle. So everyone talks about now is like, oh, the massive bad debts on the state balance sheet. Going, well, I'd rather have a lot of bad debt than no economy. You know, it's a thing that you might be able to deal with by the fact you have all of this. And
That's really good.
And at least it's directly on the state balance sheet, and it's not done through how the West did it, via the banking system, with lots of bankers getting paid. At least China did it directly. It makes much more sense to me. So I think finance can be a mechanism for alleviation of poverty and economic development, but it generally isn't. But I think China's the best shining example of it. Can I move back to your question? which is, I didn't write down the exact phrasing, but what was really good, it was about kind of comfort and security of this. It was like a feeling, and I agree with you, it's a feeling. So people go for financial advice to feel warm and secure because they're scared, and it's important and it's scary. And this to me goes back to the education. If it wasn't scary, then you wouldn't need such reassurance. You know, going to Waitrose isn't scary. Yes, it might be, but I know it's something that you know how to do. You know what to do. Oh, I want to buy some bananas. And I'm like, oh, there's too many bananas. I'm terrified of bananas. You just don't get scared. And the AI is irrelevant because it isn't complicated. It's not because it's a complex thing. You need AI and robots to replace humans because they're better at it. Actually, it's utterly irrelevant. The thing you need to buy should be simpler than going to the supermarket. I think supermarkets have too much choice. I actually find supermarket a bit stressful. There's just way too many brands, and I don't know which one to choose. And I think most shopping should be much, much simpler. I'd rather there's basic beans and premium beans, and I can decide which one I want to buy. And then I feel quite secure. I don't need a little person in a uniform standing next to the beans saying, "Are you okay?" Now, we got these sort of beans for you. I just think it's overly put on a pedestal, finance, as being something difficult that only people, you must have done maths at university to do it. And you just don't. I think it's changing the culture around finance is what matters.
That also goes back to fraud and, London and country that you were talking about, and a lot of the pension funds where people have kind of signed away their kind of pension funds for these crazy small returns. So, that also goes back to kind of the fraud and mis-selling and all the reasons why people are fearful of placing their future in someone's hands. You do want to trust them, so you want to be able to use every signal you can pick up on about who is trustworthy and is it safe and secure.
Can I pick up 3 or 4 questions? You can go just over there, Emma. The 2 next. Anything else?
This is a different sort of line of questioning, but you talked about companies from all over the world being able to provide financial services and about how finance is regulated on a national basis. How is it in future that someone in the UK will be able to be protected from the activities of the selling of financial products by a company in China or in some other part of the world? How do you prevent sort of interconnectedness risk causing harm?
Yeah.
Actually, I'm more of a different opinion instead of a question about the last question about FinTech helping fighting poverty. As the lady mentioned earlier, she said the mobile phones are so expensive. That's why how can poor people afford? But I want to offer a different perspective because I live in Hong Kong, but originally from China. So I know the situation in China, actually, you mentioned, but from the credit perspective, how the system is helping raise so many people from poverty. Another thing, actually, the mobile phones in China, I don't know here, is really cheap. And literally, this is true. Even beggars in the street, they use a mobile phone to receive your donation. Use WeChat. There's a QR. Everyone has a QR code. As long as you have a mobile phone. I think in China, it costs less than 50 pounds. And as you said, a lot of Chinese people, they may not have TV, they don't have fancy other stuff, but they all have a mobile phone. And that helps. And also China is a huge country, it's a continent, it's 1.4 billion people. Not many people have the access to cash, to a bank branch. So use this phone, it's like bringing a whole new life to them.
Absolutely.
So this is a fantastic thing, at least just from China perspective.
No, I think it's true for other parts of the world as well. Mobile phone penetration is extremely high in sub-Saharan Africa. So we tend to think people don't have. It's because obviously it's a much cheaper way of getting the network out than putting in landlines, right? So excellent. So did we have one? Oh, Carolina. Yep. Mike's. Oh, sorry. You'll go there. Yeah, no. We take 4.
Thank you. This isn't a FinTech question, though I've been extremely interested by what you've had to say. but good finance, bad finance. The radio was quoting Mervyn King this morning as saying that there really was need for a culture shift in the city, going back to 2008 and LIBOR and various mis-selling scandals. I would be very interested to know what you think about all that.
Thank you. And the final one, do you want to take the last one, Karina? Yeah?
I have two questions, really. And apologies if I missed some of the beginning of the presentation, but part of the narrative linked to alternative finance is the idea of empowerment and how democratic it is. I think it goes a little bit towards the poverty question. And so this idea of, okay, now we're gonna, is a little bit taking back control, right? We move away from the state, we don't need to be submit to that kind of the evil kind of bankers, maybe, right? So I wonder if that's possible, even from the perspective of gender, right? In terms of, is it possible that alternative finance will empower women more? Is there any discussion around that? And my second question maybe is a comment more than anything else to come. This idea of financial regulation and how that can be a model to regulate FinTech, and you gave us the example of Uber, but I have a feeling as well that in the financial world, financial innovations, especially within the derivatives market, is a little bit complicated. You have Basel 1, 2, 3, 4. The first one had 100 pages. The last one has probably 500 pages because of financial innovations and how it's difficult to actually regulate all these instruments in financial markets. So I don't know how actually that can be a model that you can rely on to then regulate finance, FinTech. But that's just,
Thanks so
thinking
much.
out loud.
As an academic, we could go on forever. But
do you want to quickly answer?
Yes. From their point of view, we have 2 minutes each. Is that good? Let them start. Yeah.
Okay, so I think the Chinese selling is really important, but that's the point. Local regulation is the FCA basically has to approve everything sold in the UK. So if you're a UK person, I guess you can buy anything from around the world, but you'll know that you're buying something that you're not supposed to and it's not regulated. In no way should this be confusing consumer. I completely agree about cash, and it's remarkable, but you can just replace it with all the phones. Women is actually interesting about a completely separate topic. I talked for a long time about how women are underrepresented in financial history. And so there's a lot about in 19th century industrial revolution about how women were actually the source of credit in the household because the asset of the household was clothing, and there'd be a lot of inter-credit systems. But because women weren't legally allowed to own properties in the name of the husband, it's not ever legally recorded. So actually there's a whole history that doesn't exist. There's a place for it, but not do that today. Mervyn King. Oh, Mervyn King. I need to not talk about Mervyn King. I think he's absolutely terrible. I mean, if there's one man that was appalling at the financial crisis, it's Mervyn King. And a man not to give lectures about change of culture, it's Mervyn King. And I think we should stop.
It is interesting, huh? That it should come from him. I mean, in a way, it brings together those two questions about kind of the global interconnectedness of it, right? Because, of course, the financial markets are globally interconnected. And if we think about the financial crash and the ways in which really the origins of it are in the mortgage mis-selling and the way in which risk itself was kind of hidden in a way in these kind of complex financial products that everyone around the, that were in stock markets around the world. So I mean, that interconnectedness still exists, and many critics, I mean, I've read about it, I don't really study it, but many critics kind of say, this is reappearing in different forms and shapes, and in fact, we're probably not far off of where we were before the financial crisis in terms of kind of risky investment products that have been kind of restructured. So certainly that sort of critique is out there. In terms of the democratic kind of potential of all of it, I mean, I'm really, very critical of the extent to which the channels that we use, the mechanisms that we use are really what's problematic. I think it is an issue, going back to that earlier question you asked about distribution and kind of broader kind of social decisions about equality and levels of inequality that we are either willing or unwilling to kind of live with. And so a lot of people have kind of said that, you know, this financial alternative industry really has ways to improve kind of distributive politics. I think it's a political choice. It's not really about the finance.
Thank you so much. I've had loads of fun. So basically, finance is not complex. I need to think about that for my students. We need to save more money. That one I already covered. And artificial intelligence is not going to revolutionize finance. So I think that those are important things we take away. Thanks so much. I have had lots of fun. Thank you, Colin. Thank you, Nia.